Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Chewy, ticker symbol CHWY. And so here I am recording this on Sunday, August 25th, after Chewy closed on Friday, August 23rd at a price of 26.70, being up almost 1.5% on the day. And so yeah, I wanted to go over the chart for the big reason of their earnings are coming up. Their call is on August 28th before the market opens. And so, there could be a lot of volatility with the stock around that. And so I wanted to go over some of these levels I had previously drawn up and then also add some trend lines to the chart that do support some of the levels that we have tested that coincide with these Fibonacci retracements. So I think it's really cool, and I just wanted to get into that so you guys have some levels that, we might be testing after earnings. And so looking at the chart here, I've got this first red Fibonacci retracement going from the low hit on April 25th, which was at a price of 14.69, and then that going up to this high here, hit on June 27th at a price of $39.10 during market hours. And so from that retracement, I have the 786 highlighted here at a price of $19.91. And so following that move up, that level was to indicate that, we might be retracing to it and finding support there. And what happened on August 5th? We pulled back almost exactly to that level, hitting a low during market hours of 1975, just below that level. So that would have been a great dip buying opportunity. So hopefully some of you were buying the dip there and not selling the fear and the panic. And another level that I don't have up here that I'm just going to throw up right now is just a trend line based on this low here of 14.69 and then just connecting it to the lows over here being the low from May 24th. And we can see that that level does coincide pretty nicely with the bottom of that trading on August 5th. And if I do switch over to the 1 hour time frame and take a step back, we actually did wick below that white uptrend during the pre-market. So, again, a great dip buying level to be keeping an eye on there. And so really, when there's a confluence of levels like that, it really does suggest that it will be acting as support if we do return to it. And so I kind of want to use that guiding us moving forward, especially around earnings. And so here, in this orange retracement coming down from 39.10 to that low of 1975 hit during market hours on August 5th, we have some levels now to the upside that we might be retracing to on our way up. And it looks like we have broken above the 236. I don't have that drawn up here because, it's not acting as resistance anymore because we are above it. But the 382 does seem to be acting like resistance because we haven't been able to get any notable closes above it. And so that 382 is at a price of $27.14. And it looks like the high on August 19th was at a price of $27.73, and we actually did close above that 382, closing at a price of $27.27, so just above that level. But that's the only day that we were able to get a close above it, so it does seem to be acting as notable resistance. But one good thing about the pattern that we're forming is that it could be a bull flag, which would suggest that price could be breaking higher, perhaps coinciding with earnings. So, I would look for the possibility of the chart breaking to the upside. And so the next level up on that Fibonacci retracement is going to be the 50%, and that is at $29.43, being just below $30 a share. And so I actually find that to be a really, really interesting level, not necessarily because of the chart, but because of an unusual whales alert that I received a couple weeks ago here looking at the Chewy $30 strike call expiring on August 30th. So that's coming up on this Friday. And so there were some alerts that were coming out. It looks like back on August 8th, as well as August 15th. these large green spikes that you can see there with that pop-up not getting in the way, those correspond to very large orders, buy orders going along on these calls. And following those, over here we can see that the average fill was about 54 cents. Over here, it looks like the average fill was around 74 cents. And following both of those days, price has gone up a lot. It looks like the average fill high was around $1.67. So, basically, turning around $54 per contract or $74 per contract here into $167 per contract. So, those were really nice swings. However, as you notice, the average fill price has since pulled back, currently at around 86 cents. So, either way, both of those fills, these big spikes, they would still be in the money. However, after this big move to the upside, it does seem like the risk is now on, now that we're getting closer to expiration with earnings coming up after having seen this massive spike. And if we do consider that the open interest is currently under 9,000, I've definitely seen a lot of contracts expiring out of the money with more open interest than about 9,000. So with that below 9,000, I think that, it's quite the possibility we'll be closing below $30 a share this coming Friday. So good to be cautious with that. Really just using unusual whales here as data moving forward that, it's probably not going to be at $30 a share or above on Friday, but that doesn't mean that price won't be going higher, as it does look like we are forming this bull flag. But one other thing that I did want to point out before zooming in here and considering some levels to the downside is, I just happened to notice this, that, maybe there's a head and shoulders pattern here. Nobody wants to hear it, but, I just wanted to put up a trend line here just to consider it. So drawing it from the low here on May 31st and then connecting it here, let's see, with the low from June 14th. So we've got a nice little shoulder there, a head here, nicely sized, but with this big spike in it, and then this other right shoulder over here. And so one thing that I could do is take a measurement from the very top here down to the neckline to get an idea of where price could be going if this is to play out as a head and shoulders pattern. And that would actually bring price down to around $9 a share. I don't think that's going to happen, but I do think it is important to note that there is a possibility that this bull flag might not actually be a bull flag and we could be breaking to the downside. And also, just like with this trend line, I did want to point out that this trend line coincides with the price action that we're currently seeing. So that's a confluence of levels acting as resistance. Just like over here we had a confluence of levels acting as support, it does seem like the exact opposite is happening right now, and we are having a tough time getting above this 382 at 27.14 or breaking above this uptrend. But if we can break above it, I think it would then be acting as support, and I think that would be really good for the stock. So, hopefully we can break above, getting to around $30 a share. I think that would be excellent. But if we do close below it, as I suspect we will on Friday, do keep an eye to the downside. And so I have a number of Fibonacci levels here highlighted to the downside. Rather than going over all of them, I am going to draw up one more trend line that could suggest which one of these levels we might be returning to. But before I do that, I did want to point out that the 236 is here at 25.85. So far, we have been holding above that. If this is to be a bull flag and we are to be breaking out, I would prefer not seeing any closes below 25.85. And actually, if we did see a close below 25.85, that would also be below the low hit on August 21st, which was at a price of 25.92. So really, we don't want to be seeing closes below that level. That would be suggesting weakness and that we could be breaking to the downside. And so looking at all of these levels, tons of them that I could consider, I'm really just going to draw one trend line that stood out to me based on these other ones, going by the same principle, seeing some highs that we previously were testing and drawing a line. And so here I'm going with the high from July 1st, which is at a price of $30 a share, and then connecting it with the high from July 16th. And so from that downtrend, we can see that it did act as resistance here before we broke above it. And considering where we are currently at, it does seem like that downtrend either would be corresponding with a retest of this range here, the golden pocket ranging from the 65% level up to the 618, going from 2254 up to 2280. So we might be testing that right around earnings. Or if we break below that, we could be revisiting the 786, just like we did with this red line here, and that would be at 2146. And, one thing that really stands out to me about that level is not only does that intersect with this downtrend, but it also is approximately at where those two trend lines intersect. That would be coming down to a price of right around $21. So if we do see price start to collapse either before or after earnings, if we start to see some volatility around that, and we do see it opening up on Thursday lower than 25.85, I'd be patient. It might be coming down to around 21.50, testing that level, finding support here, and then that being the new low. And one thing you might notice too that I do have up here is this blue line at 16.91. That was a gap that has yet to be filled. And as far as the chart goes, I think that this confluence of levels here, I think that will be acting as support. So I think really like the lowest that we will be seeing is probably $21 a share. I don't think we're going to be breaking below 20 again, and I don't think that we're going to be filling this gap. I suspect it will be left behind, at least for the foreseeable future. Maybe we come back to it a year from now, but for the time being, I don't think we're going below 1691, and that means I do not think that we're going to be pulling back to this 1618 at 1482. 21 is the lowest I see it, and I'm hoping that we get to see some price action above 30 this week, but I suspect that's unlikely. And if I were to put money on it, I would be putting it on a price coming down to 21, or at least I'd be bracing for that as I am. But if it does take off, I'm also going to be prepared for getting rejected around 30 over the course of the week and then pulling back, maybe finding 27.14 as support rather than resistance before consolidating some more and making some moves after that. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and good luck trading earnings. Take care, you guys.